Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. I'm Tom Keene, along with Paul Sweeney. Join us each day for insight from the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app. If you are a certain persuasion, you remember where you were when you closed the book on the Winds of War by Herman Wouk, and you said, when's he going to write the next one, War and Remembrance? And you waited 2 years. Young James Stavridis had this feeling, as I did, like you waited. Except Admiral Stavridis, of course, lived.
Yep.
The American military, the United States Navy of Pug Henry as well. The book is The Restless Wave. It is a novel idea, a novel from James Stavridis.
I'm 4 chapters in, but you took it off my desk. I'm ready to go to chapter 5.
And it's just wonderful about a young lad before 1941 across the arc of World War II. What's the why, Admiral Stavridis? Why did you need to write The Restless Wave?
Tom, I'll give you 3 reasons. I'll do them fast. One is Winston Churchill said, the further you want to look into the future, the more you have to look into the past, meaning the lessons of World War II are still with us. Great power war in the Pacific, the rise of technologies, and then third and finally, and most importantly, you mentioned it, Tom, character. We think of Captain Pug Henry from The Winds of War. Here we have a young naval officer. He's flawed. He makes mistakes. He's in a love triangle. There's betrayal.
Right.
It's the early days of the greatest generation. So 3 reasons to write a sweeping novel about the Second World War.
I'm going to give this away. Paul's 4 chapters into the book. Page 310. The XO took a breath. Admiral Wright failed us, sir. He was slow and hesitant. He doesn't understand the new technology. His battle plan looked like Dewey at Manila in the Spanish-American War. Admiral Stavridis, are we living that today with new drone technology and all? Does the Navy have to adapt and adjust?
100%, Tom. And look at Ukraine, where the Russian Black Sea Fleet has been sunk by the Ukrainians, except the Ukrainians don't even have a navy. They're using drones, cruise missiles, exquisite intelligence, surface forces operating using artificial intelligence. Our Navy better learn those lessons and get ready. And that's something that we experienced at the start of World War II as well.
Admiral, Tom and I have a million questions on many different hot spots around the world. Let's start with the Middle East here. Can you give us your latest thinking on how things are developing there and how you kind of foresee, I guess, the next several weeks and months?
Clearly, the next big muscle movement is going to be an attack by Israel in retaliation, appropriately for 200 ballistic missiles that came raining down on Israel 5-6 days ago. So what will that attack look like? I think that's the key question for investors. I think it's going to be big, but not shock and awe level kind of strikes. They'll probably go against the military-industrial complex in Iran, probably not against the nuclear power complex, and probably not against energy. So that should be something that investors can tolerate as we look at rising risk in the region. Bottom line, I think there's about a 1 in 4 chance of a broader war in the Middle East that drags the U.S. in. That's uncomfortably high, but I'd still bet against a big sweeping war in the Middle East. Let's hope not.
Admiral, to what extent is the U.S. policy being represented by the Israelis here? It seems like the relationship between Biden and Netanyahu is not maybe as strong as we would have hoped here. And we have U.S. assets, men and women in the region there. So where are we in terms of dealing with the Israelis?
You are correct. We have 50,000 troops in and around the Middle East, many of them at sea on Navy warships, by the way, but many ashore as well. So it's critical that we maintain the strongest relationship with Israel, which is our best partner in the region. Unfortunately, at a personal level, it's pretty clear that Prime Minister Netanyahu and President Biden have not good relations. And here's our hope. The next tier down, that's General Lloyd Austin working with his counterpart, Israeli Minister of Defense Yoav Gallant. That's a pretty good relationship, but a storm cloud to watch, no pun intended, a terrible hurricane coming, but a storm cloud to watch is that Yoav Gallant, Minister of Defense, just canceled a meeting in the Pentagon. So relations are not good at the moment, U.S.-Israel.
James Stavridis, late in your book, Arleigh Burke shows up. No, folks, it's not the name of a boat. It's an actual person. And Arleigh Burke shows up to drive the story forward. And he says at one point, with some heat in his voice, the difference in an officer, good or bad, is about 10 seconds. There's an officer from the streets of Boston named John Kelly, who was the longest chief of staff the Marines served Donald Trump. And he's come out and he's made real clear he's not a fan of the operations of the former president. If we have elected President Trump, in 2016, this was all new. Will he be able, as commander-in-chief, to form a military apparatus after what we hear from the likes of John Kelly?
First of all, John Kelly is one of my closest friends. And I encourage everybody to listen, to read, to follow what John Kelly has said about attempting to take President Trump to a cemetery in the north of France. And according to John Kelly, President Trump described those buried there as suckers and losers. I think that is a disqualification to be a commander-in-chief. In terms of can he put together coherent national security for the nation, it depends on who he selects to bring in office alongside him. The quality people, General Jim Mattis, General John Kelly, General H.R. McMaster, they're not coming back. You don't have to get kicked by a mule a second time to understand whether that's a good thing to do or not. So if there is a second Trump presidency, we'll have to see who's willing to come in and who does come in.
Paul and I went to the Lawrenceville and Fairport War College, where we figured out the Germans had two fronts, the Eastern Front and the Western Front. Israel has 2, 3, 4 fronts right now, extending over to the Persia of your book, The Leader's Bookshelf. Is Netanyahu extended, or because of his small geography, can he handle those many fronts?
I think Israel is overextended. I'd say 5 fronts. It's Hamas in the south, Hezbollah in the north. Obviously, it is the Houthis to the far south. It's also the militias in Syria, and it's Iran itself. I can count that on the 5 fingers of my hand. That's too many. Israel is only a nation of 10 million, 7 million Jews. That's too few to ultimately fight wars with countries like Iran, newsflash, which has a population of 90 million. That's Iran alone. So Israel needs friends. And let's go back to paragraph 1, how important that relationship is for Israel and for the United States, between the U.S. and Israel.
Admiral, I don't want to lose sight of Ukraine. Can you give us your latest thinking on what's happening in Ukraine and how it might play out?
I can, and thank you for raising it, because they are losing oxygen to all that is happening in the Middle East. The situation there remains relatively static. The battle lines are in place. Russians are moving forward very slowly in the east. The Ukrainians have carved a small chunk out of Russia in the north. Ultimately, I think after the election, we are probably headed for a negotiation, because the burn rate, think private equity, the burn rate on both sides of that battle line is terrible. Pressure will be for a negotiation, regardless of who is elected in Washington.
One final question. In your book, The Restless Wave. Kai is trouble. Did you know a Kai in Hawaii, Admiral? Asking for a few. Kai is nothing but trouble in your book, Admiral. Did you know someone like Kai?
Kai is a beautiful Hawaiian woman who ends up in a love triangle. Tom is correct. Between a Navy officer and a Marine Corps officer. So in the Restless Wave, yes, Kai is trouble. And yes, I have met a few beautiful women in Hawaii over the years.
Bottle that. Yeah, exactly. James Stavridis, thank you so much. Greatly appreciate it. The Restless Wave, folks, I can't. Yep. It's not going to be my book of the year because Kai's in it. I can't have Kai in my book of the year. Admiral James Stavridis, The Restless Wave. If you love The Winds of War, find it. It's hugely readable. Joining us now, and for Global Wall Street, it's time to lean forward. He's with PineBridge Investments, which is, managing money and that, a huge heritage with AIG. Stephen O joins us, Global Head of Fixed Income, except he writes like PhD sell side. His notes are absolutely exquisite. And the key thing, Stephen O, in your note is it's not time to be defensive. How do you be offensive in fixed income?
Well, by writing that, it was really looking forward to the fact that despite the tight valuations, the economic environment, as well as the Fed as global central bank easing cycle, will continue to be supportive of risk assets. So what does that imply for not being defensive? It means that the natural bias in that environment would be defensive, but at a minimum, you take your exposure up to a beta type risk exposure and take pot shots at targeted opportunities. What you don't want to do is go hyper defensive in this type of environment where yield is likely to carry the day.
So is that simply Paul Sweeney buys a 30-year New Jersey hospital bond? Is that what that devolves down to?
Well, I guess it depends on, that's a lot of security selection risk there, so I can't opine on that. But I think broadly speaking in terms of where is the risk component in fixed income, right? It's going to be in the credit segments, and that's where you don't want to be hyper defensive.
All right, something we don't talk about, but I think it kind of goes to where you're going, which is talk to us about the leverage loan market. What is that, and how do investors get exposure to that?
Well, leverage loan in its simplest form is corporate debt that's syndicated and secured by assets of the business. In the simplest history, it was really loans that were issued by banks, but of course, banks are not really in the origination of debt anymore. They're in the intermediary business. And the loans that they used to originate, which primarily back leverage buyouts, have now moved to an institutional market where it trades very freely. Of course, the adjacent market that's talked about ad nauseum for the last 5-6 years is the private credit market as well.
And are there opportunities there, do you see? I mean, is that something that if you want to take maybe even a little more risk than above and beyond high yield, that's the market you look at?
Well, first, I wouldn't say that it's higher risk than high yield. It's really adjacency risk because those are both below investment grade corporate credit. But what you are getting right now is the credit spread over base rates is elevated, and it's one of the few places where you are getting excess yield. Loan spreads right now for the index is over 400 basis points, which is over 100 basis points over the high yield index. But you do have to adjust that for like risk, because the way to look at it is oftentimes there's a tendency to look at asset class to asset class, and you have to look at ratings to ratings or like risk to like risk, and you're still getting a premium for that component.
Talk to somebody not as sophisticated. They're in a money market fund going, this is too good to be true. Our money market fund yields now too good to be true?
Well, money markets funds by nature are very short term, and it's been a great place to be, although one could make the case that perhaps there was opportunity cost of not being in equities. Where you look at the yield today, and given the shape of the curve at the short end where Fed funds and so forth is, money market optically provides you a very high yield, but you have to look forward. That yield is going to come down. And so I think it's just a matter of, do you utilize money market as primarily a return-seeking area, or do you use it as a liquidity while you hide out in what is acceptable returns at this point in time?
Kids use it as a liquidity.
All right, Stephen, John Tucker and I, we've been trying to get Tom out of his triple leverage all cash fund.
Nope.
I've got the Fed that's cutting rates, and I'm not in a recession. Shouldn't Tom be taking some risk here?
Well, I think anybody's risk appetite is a function of where they're at. For all I know, Tom may be so wealthy that he should be taking a lot more risk.
Got that right.
He's in NVIDIA.
John, you want to chime in on that?
Oh, yeah. What's that tuition bill now?
Thank you. Exactly. Continue, Mr. O.
And in terms of where do you want to be in terms of risk right now, I think a balanced approach is the best approach, because in certain market environments, the time you want to take risk, and I think Warren Buffett said it best, is when there's a lot of trauma out there, when there's fear in the marketplace. There is not much fear in the marketplace out there right now. So I don't think this is an environment where you want to start adding more risk to your portfolio. It's simply a type of market environment where you want to be balanced in your approach, because nothing looks particularly cheap, but it's hard to see anything that's going to cause a meaningful sell-off in the near term.
September was, I think, a record month for investment-grade issuance. So when Morgan Stanley, Goldman Sachs, all those folks were ringing you guys, were you picking up the phone buying this new stuff?
Well, we constantly look at not only what is the value coming to the marketplace, but what is the value in relation to what's trading in the secondary markets overall. And typically there are some new issue concessions, although at times that has been very anemic. And so we have been targeted in our approach to buying some of those new issuance. There have been some.
So you don't buy everything that comes across the transom?
We're not a $10 trillion asset manager that has to be beta. We pick and choose, and we manage a very targeted alpha approach portfolio.
Stephen, thank you. Stephen O. with PineBridge. Brilliant note. Again, we protect the copyright of all of our guests. Look to PineBridge Investments for Stephen O.'s brilliance. Professor Schiller now from Brown University, doing so much for the Taubman Center for their international relations. I guess it's a close election, Wendy, and I guess there's a lot of tension. And I remember sitting there in shock after Bush-Gore going, how close is close? Almost like, I think it was Kennedy-Humphrey in 1960. I really can't remember, with Mayor Daley. Clyde Haberman, the New York Times 24 years ago on this day, highfalutin but hardly proud of it. He was talking about fancy Yale people that went to Brown or Yale or whatever, fancy Ivy League people, dumbing it down to get elected. Is that what we're seeing right now? Is everybody going basic, for a couple, 4 weeks here because they have to?
Well, Tom, I first want to address this is exactly what I've been talking about, Bush-Gore. Statistical polling within the margin of error. As you remember, they were absolutely statistically tied going into that election. One day one would be 48, the other would be 45. So exactly what you're pointing out is that everyone said, oh, this is historic. We've never seen anything like it. Yes, we have. If you're old enough, we saw it in 2000. And that aftermath of that election was a bit messy, we can say. So I think we have to brace ourselves for that. So I don't actually think that they're dumbing down. I think that the Trump campaign, he can go off the ranch sometimes, has been disciplined in its messaging on border security and inflation. That's, basically pocketbook issues and security issues. And Kamala Harris tried to raise the conversation about her economic plan. It didn't take. So now she's simplifying it. I'm simply going to make your life economically better. That's what she's doing, and leaving off some of that.
Okay, and Paul wants to jump in here. Is that policy, Professor Schiller, to say, I want you to feel good, or whatever, whichever candidate? I don't want to pick sides, but is that what our policies devolve down to, is feel-good statements?
Well, the problem is, as we've discussed before, is that the federal government is so large now. And it is so enmeshed in every American's life on multiple dimensions that most people don't even grasp how involved it is. So discussing a simple policy change is not simple, because any policy change will ripple through a set of federal programs and affect lots of different people in different ways. So it's not as easy as it used to be to say, I'm going to do A, and you're going to feel it in 6 months. It just doesn't happen in America anymore.
Hey, Wendy, let's fast forward to maybe the evening of November 5th, maybe the early morning hours, November 6th, maybe bleeding into the day of November 6th. Are we going to know anything? How is this going to play out, do you think?
I think we faced the situation in 2020 as well. I think there are going to be some states. You can expect Georgia, you can expect Arizona in particular, those states. And Pennsylvania, by the way, doesn't, to my knowledge, does not open mail-in ballots till after they count the in-person ballots. And if there are legal challenges for hand counting, not just in Georgia and Arizona, but other places, it will slow down considerably. Wisconsin also. So unless, which we don't expect, one candidate is just going to run the table, we're probably not going to know very much until the weekend, at the soonest. And it will be up to secretaries of state, attorney generals, governors to certify election results and make sure that county level election officials certify those results in a timely fashion. That's going to get messy pretty quickly.
Turnout. What do we expect for turnout, Wendy? Do we expect this to be a high turnout election, a low turnout election, and does it favor one or the other?
Well, I'm going to crib from one of my colleagues here at Brown who said that she expects that it will be lower than even 2020 because of mail-in balloting being so predominant in 2020, but that the general level of enthusiasm is still high among Trump core and, is pretty high among Democrats, if you can call it enthusiasm or fear, one or the other. But it's not quite the same as it was in 2018, 2020, when we saw historic midterm and presidential election turnouts. There's still a little bit of ambivalence. And voters don't like to regret their choice. They don't want to regret their vote. So if they're still uncertain on election day, they may very well just stay home.
Wendy Schiller, I know with the electoral quality of Rhode Island that Vice President Harris should have been sipping a Narragansett lager beer the other night, but instead she went with the champagne of Wisconsin beers, Miller High Life. Okay, what is the symbolism of sipping a beer on TV? What does that get you politically?
Well, Bill Clinton went to McDonald's. Barack Obama had to find some food that was bad for him that he was willing to eat on camera because we knew he didn't do it otherwise. This is part of, I can identify with you. I'll drink a beer too. I think it's a stretch. I don't think that's the image necessarily that's going to get Kamala Harris elected. But I think each candidate and each campaign right now is really like, what do we do to get this momentum?
Okay, address it. Your advice, in the time we've got left. You get 30 seconds, Trump. What's the Schiller to do for Trump? What's the Schiller to do for Harris?
Trump, I'll make the United States safer. I'll make you safer. I'll make the world safer. Kamala Harris, I'm going to make your economic life better. I'm going to protect your working rights, your minimum wage, your health care, the fundamental things you need to live a good life. The Democrats always protect, the Republicans always try to destroy.
Can you imagine in her class? I'm pulling a C-, and she's looking at me with an 8 in her eyes.
I know.
Professor Schiller, thank you so much from Brown University there. That's why I love just short and sweet.
Yep.
It is a pedigree of extinction. He was at Oxford and INSEAD and did some amazing work at Morgan Stanley. I'll get to it in a moment. Readable essays on the chaos of continental banking, and then went on to work with the British government and, of course, service to the Bank of England as well. With Oliver Wyman in our studios this morning, their vice chair, Huw van Steenis, joins us. Huw, Paul's going to get to the private credit essay where we are. We had Jim Zelter in from Apollo Global Management the other day. I got to go back to your wheelhouse where it was like we'd read these 15-page reports and go, damn, I got to read this whole thing. Is it finally with UniCredit and Armati and Commerce Bank that we're finally what you were writing about 20 years ago?
Well, thanks for having me on. Look, my goodness, I wish Andrea the best of luck on this because I think I think we need cross-border.
But culture still matters.
Culture still matters, but let's be clear. Lufthansa took over the Italian airline. Why can't it happen in reverse? And also, UniCredit owns a German bank already. So actually, it really is an in-market German deal. There's two German banks going to potentially merge with each other. So I think I was at an investor conference 2 weeks ago. I'd say my read is that the market thinks there's like a 70 to 90% chance it'll happen, but they might need to give a pawn or two.
What's the government thing? David Harrow of Chicago went down in flames on this. Finally, they're going to get their act together, and the continental Europe is going to act more like American and Anglo-Saxon banking. Baloney. Do you see a change in the German government or in the Italian government?
It's slow. Look, we are seeing, but below the radar, we are actually seeing some bank M&A. There's actually 3 live bank deals in the UK at the moment. So, they're small, but they're happening. Spain's got one on the boil too as well. So there's bits and pieces happening, but let's be honest, it's not US style. And we haven't, and like as Jim Zelton would say, we don't have the capital markets either with the breadth and depth that we need.
But you certainly can have that. I mean, right before the great financial crisis, Tom, the argument was, is London more important than New York? And that was a valid argument to be had.
Totally.
And then Brexit happened and you guys screwed it all up. But is the horse out of the barn for European banking? They will never catch up to Bank of America, to JP Morgan.
So it's interesting. At the moment, if you look at the top 20 market caps of banks globally, there's only 2 Europeans.
Yeah.
One's
Interesting. I didn't know
HSBC, which is effectively Asian, so it's not even European. So it's only one, and that's UBS, and that's number 20. And so,
no kidding.
Absolutely. And so I think UBS, with my old boss Column and Sergio, actually do have a chance to be in the Global Super League. Everyone else is in a kind of a European league or even a division below. And I think that's the challenge. And I think,
don't the European Union and the UK, don't they recognize that as a structural flaw that's going to hinder that part of the world for generations?
Well, look, absolutely. So, someone well, Mario Draghi just put out a report. Now, it was probably a little bit more than 15 pages, Tom. I mean, he had 150 recs. I mean, even one, two.
Oh, come on, you wrote it for
No, not this time. But actually, his finance piece made a lot of sense, which is we need securitization markets to reopen. We need deeper capital markets. And we need some of the larger banks to merge because scale matters in banking. You see that here. You're talking about JP Morgan on Friday with Jeremy's earnings. Scale really matters, and we have too few banks with that scale.
All right, your latest work is a topic that Tom and I talk about a lot because we're fascinated by the growth of this private credit. Early in my career, I was at the Chase Manhattan Bank. We were making leverage loans like crazy, making money hand over fist. I would never give up that business to private credit. But that's what's happened, hasn't it?
No, look, it's really fascinating how much banking has changed, and I think it's because the rules, whether they're Fed rules or Basel rules, are encouraging banks to limit the amount of risky loans they can take. Either they're hard capped or soft capped, or it's just the amount of capital. So the way I think we talked about this last time, the way I think about it is that banking is being retranched. The riskiest pieces are being laid off to private credit or to others, and the banks are left with slightly the lower risk pieces. Now, from a point of view of banking stability, that's not the end of the world, but it means they're less profitable. They need more scale. And actually, one interesting thing, which I don't think has come out clear, is there are banks who play to win and the banks who play not to lose. The largest 5 or 6 banks say, actually, if I've got private credit, I can write even more loans and lay more off. But that's not how most people think. So
we are seeing deals with banks and private credit. What is going on there? Explain how those.
Yeah, so look, let's be clear. This is a real thing, and obviously the Citigroup was the biggest group so far with Apollo.
Right.
But we've seen 14 tie-ups in the last 12 months versus only 2 in the year before. So it is a real thing. Barclays with Blackstone is another big one. Now, what's happening is, the big private credit firms need to originate assets because they're hungry for more assets. And they can't originate them all themselves, so they're working with the banks.
They need more deals.
More
You're
deals.
They
need more
deals
assets.
like Citigroup.
There's plenty more in the works.
Okay, but the simplistic thing for mere mortals listening, and good morning worldwide, particularly in Huw van Steenis' United Kingdom, the heart of the matter is good people like Jim Zeltner, Mark Rohn, and others are out trotting out, this is painless, even though we have illiquidity, there's no big deal. You know the drill. Do you buy it, or do you have a skepticism that we see out there from others?
So no, I think for the leading firms let's be clear in credit, and Paul knows about this. You can make a good deal or a bad deal, and you can lose all your money or take a big haircut. So you need to be very thoughtful when you're letting out your sheet. There are smart people, and Tom, as we both know, there's some less smart people. So within the private credit, of course, there'll be some deals which go bad. But in this kind of thing, insurance companies, which are about half the assets funding private credit, need yield. And so I think the really interesting sub-theme here is that as private credit gets more insurance assets, they lower their cost of capital and they become more relevant for investment-grade assets in the marketplace. And I think that's the trend which Apollo does brilliantly, Blackstone's doing very well. And I think that is a thing. And obviously, if it's investment grade, well, that is less risky, isn't it, Tom? So, don't get me wrong. I'm sure there'll be a fringe of bad practices, but I think on the whole, actually, this is more investment grade than not.
Have you ever worked with Pierpont, layering into the TV show industry? I mean, Huw sounds right out of industry, doesn't he? Are you watching industry? How real is it?
I'm not. I should be.
Oh, stop it.
I'm a failure on that. No, I haven't.
You're not watching Industry?
No, Billions I love, but I haven't watched Industry.
Oh, you got to see Industry is like, I'm looking at it with Mrs. Keene. I'm going, my God, that guy talks just like you.
It's actually pretty good.
Huw van Steenis, thank you so much. Rare to see him. He's in studio today, of course, from the United Kingdom, working with Dan Tannenbaum and Oliver Wyman as well. Important comments there on private credit. This is the Bloomberg Surveillance Podcast, bringing you the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.